Hello and welcome to another episode or another webinar in our Finance in Africa series. And today we're looking at social financing in Africa. And I'm again, as always, delighted to have with me Mufti Ismail Desai. He's going to take us through from their perspective, how they look at social financing in Africa. Without any further ado, Ismail, I'll hand over to you.
Thank you very much, Amir, for your kind introduction. And with that, I would like to begin today's session on Islamic social finance. And in essence, today's session will be based on two parts. The first part is the presentation that will cover Islamic social finance, the basis of Islamic social finance and fintech, with certain examples of Islamic social financial instruments, and also to end in terms of how GIFS and our firm, in association with ABiQ, can assist with any Islamic social finance projects and the current initiatives that we are working on. Thereafter, we'll go on to the next segment, which will be in terms of the Q&A session. So in the interim, if you have any questions, please, upload your questions via the chat feature. Or if there are any unanswered questions, then you can always email us and we will then respond. So without further ado, I'd like to begin today's session, and we'll start off with our credentials at GIFS. GIFS, Global Islamic Financial Services. We have advised various institutions globally on Islamic finance, including the Ethica Institute of Islamic Finance, which is based in the UAE. We've also advised the Botswana Life Insurance Limited Company, which is the largest insurer in Botswana, and they control 70% of the market share. And we have advised them on Islamic financial products. We've also advised the Center for Advanced Islamic Economics based in Pakistan. We've also advised various governments and central banks on Islamic finance, and we currently serve on 7 central banks in terms of advising them on Islamic finance. We are also founders of the Russian Islamic Finance Council, which has close to 84,000 members in Russia and the former Soviet republics. Next slide. We've also advised on developing several innovative Sharia compliant products. So for example, we've developed the Sharia compliant real estate and asset management funds globally. We've also structured a domestic sukuk or an Islamic bond in South Africa. We've also advised a South American government on a sukuk bond. And we also conduct the Sharia audits and reviews for various Islamic financial institutions globally. Next slide. We also advised various governments and central banks on Islamic finance, and we currently advise a major European religious agency on Islamic finance with a special focus on Islamic social finance. Next slide. These are some of the services in terms of advisory that we offer in terms of Sharia product development, where we can develop a product. We also do the fatwa and certification. We do the Sharia review. We also do Sharia audit and assurance, Sharia mediation, arbitration, Islamic private wealth management, sukuk and Islamic fund structuring, etc. Next slide. Our motto is embracing Islamic finance through Sharia compliance, achieving new heights through growth and expansion. We now move over to the actual discussion today, which is an introduction to Islamic social finance. So what exactly is Islamic social finance? So Islamic social finance is the proposition of financial services to reduce poverty, achieve social protection for the poor, and reduce their vulnerability. So in essence, Islamic social finance is a mechanism and a tool to reduce poverty, reduce their vulnerability, and also to achieve a certain social protection for the poor. There are 7 key concepts of Islamic social finance. The first is Zakat. What is Zakat? Zakat is Islamic social alms or obligatory alms, which every Muslim has to dispense of 2.5% of the zakat nisab amount. So in other words, that if their wealth reaches a particular threshold, then every Muslim has to dispense of 2.5% of their wealth, in obligatory charity. And the zakat industry is worth, close to $700 billion globally. And there's a huge requirement for creating technology solutions around zakat. And in fact, there are various laws that have been promulgated around zakat. We at GIFS serve on the boards of 7 zakat organizations globally, including the South African National Zakat Fund, which is the largest Islamic charitable institution in Africa, and we dispense of close to $50 million on a yearly basis in Islamic zakat or zakat. We also serve on the boards of the National Zakat Foundation based in the UK, and Pay Zakat, which is based in Moscow and intends to set up offices in Dubai also. The second important concept is that of waqf. Now, waqf refers to an Islamic endowment. In essence, one contributes one's assets to a waqf, to an Islamic endowment, for the unending benefit of the poor and destitute. And examples of waqf include lands that have been donated for the benefit of the poor, etc. And waqf, as an institution, holds huge promise globally in terms of serving as a poverty alleviation mechanism in the Muslim world. Thirdly, is sadaqah. Sadaqah refers to Islamic charity, which is voluntary charity. And sadaqah can be used, or Islamic charity can be used to fund Islamic social business enterprises where budding entrepreneurs can use these funds to then develop their own social enterprises and businesses, etc. The next is sukuk, or Islamic bonds, and we'll go through that as a separate slide in terms of how sukuk or Islamic bonds as a social can be used as a social finance mechanism to advance the cause of the poor, etc. The next is microfinance, or Islamic microfinance, and you have various institutions like in Malaysia, you have the Mal and Tamwil system, you have the Uhuwat model in Pakistan, where interest-free loans are provided to the poor, and they can also benefit from interest-free loans. The next is takaful, or Islamic indemnification, or in essence Islamic insurance, where guarantees are provided by different business funds and SME funds, etc. And these guarantees can then be used by these entrepreneurs to procure funding, etc. And the last is what is called Qard Hasan. Qard Hasan refers to an interest-free loan. And there's huge rewards for providing interest-free loans. And as I said, there are various examples of where interest-free loans are provided to entrepreneurs. For example, the Ukhuwat model in Pakistan. So these are some of the main Islamic social finance concepts, and we will enumerate that going forward. So what is the opportunity for Islamic social finance? So Islamic finance industry is said to be worth close to just over $3 trillion by 2030. And the Muslim population will be approximately 26% of the world population by 2030. And if you look at Africa, 42% of the population on the African continent are Muslim. So there's a huge opportunity for Islamic finance and Islamic social finance in Muslim denominated countries. The other important factor here is to ensure that there is proper Sharia compliance and governance of Islamic social Fintech platforms, whether they be Islamic crowdfunding platforms, etc. Now, Islamic microfinance is the alternative to interest-bearing conventional microfinance offered to small and medium enterprises to raise debt or equity-based funding. So one of the best mechanisms for poverty reduction and social finance is small to medium enterprises. So on the African continent and globally, you have small to medium enterprises or SMEs that make up a large portion of the funding base of the GDP of economies. And this is more so in Islamic economies, where you have a middle to lower income economic base, and you have various SMEs that require funding. So instead of them getting conventional funding, they could get alternative Islamic-based funding, whether it is through equity or debt-based. It has been described as a powerful mechanism that offers financing to the entrepreneur of a low-income class of society to enhance their financial inclusion. So, this is based on the mechanism that, don't give a man a fish, but teach a man how to fish, so that tomorrow you don't need to give them more fish. So this is an extremely important point, is that how do we, create, or how do we drive entrepreneurship so that that creates and enhances financial inclusion and enhances poverty reduction in Africa and globally. The low-income group entrepreneurs are referred to as being highly risky and unbankable. Now, this is an extremely important point, is that how do we hedge investors and funders from the risk that is posed by the low-income group entrepreneurs, or by these small to medium enterprises, where generally you'd have, a one-man business, or you would have a mini enterprise that could be overcome by various different challenges in the business field. So that is why we have to create an ecosystem of Islamic insurance, Islamic takaful, that can then provide guarantees for these entrepreneurs so that they can procure the right type of funding, and the entire structure is then protected from risk. It uses various Sharia compliant contracts such as Murabaha, Qard Hasan, Ijara, Salam, and so on, to broker debt-based microfinance initiatives, while Mudaraba and Musharaka are generally employed in Islamic microfinance as an equity arrangement. So you could have both equity arrangements and you could have debt arrangements. Now, on the debt side, it is simply buying and selling. We, for example, at GIFS have developed an Islamic invoice discounting solution where entrepreneurs can supply goods and they can then get the invoices discounted, where cash is released on an Islamic basis to be used by the entrepreneur for working capital, etc. And then on the equity side, you have the Mudaraba and Musharaka, which is Islamic partnership basis. Now, this is an extremely important concept, where if deployed well, could make a huge impact, in terms of poverty reduction, etc. So you could have Islamic crowdfunding or equity contract, Islamic basis. So you have various initiatives like the likes of Ethos crowdfunding, Capital Boost, etc., that are conducting Islamic equity crowdfunding initiatives. But however, much more is required in terms of having more localized based equity peer-to-peer crowdfunding initiatives, where investors can link up with other entrepreneurs, and there could be a third-party verification methodology to ensure that the funds of the investors are being protected and the rights of the entrepreneur is also being protected. One example of this that comes to mind is, in Africa, you have various small businesses that operate out of township economies or in the rural areas. Now, these businesses, they would purchase goods from the town and sell them at a small markup in the rural areas. Now, how can these businesses now benefit from funding where investors can fund them? They can receive a percentage of the profit, and the entrepreneur can also fund their businesses. So a mechanism for doing that would be an Islamic crowdfunding platform where there are agents on the ground that make sure that the necessary funds are being utilized in the right manner to fund these entrepreneurs. And there are various examples of this, the likes of which in Malaysia, Indonesia, etc., which have made much advances in terms of Islamic microfinance, etc. And we need to import these models into Africa so that we can turbocharge growth in the rural economic sectors. Next slide. Now, this is a slide of Islamic social finance as a global humanitarian action plan. As you can see, that there are various initiatives and concepts, as we've discussed, like Qard Hasan, which is an interest-free loan. You have Takaful, you have Zakat, you have Sukuk, etc., and Islamic microfinance initiatives, where through donations, through Zakat, one can use all of these funds. As you can see in the middle, you have Zakat funds, Waqf, etc., that can be used now to be deployed via these concepts to then create Islamic business and social enterprises that can then reduce poverty. So as you can see in this entire ecosystem, how the ecosystem works from an Islamic social finance perspective. Next slide. So the question is, why Islamic social fintech? So one is Islamic social finance, but the other and more important aspect of it is Islamic social fintech. So by using fintech or technology, we can disrupt traditional models of distributing aid, of humanitarian aid, of social finance, etc. And as I mentioned, you can have Islamic equity crowdfunding platforms. You can have technology platforms where, at the touch of a button, through a cell phone or through a mobile, entrepreneurs in a very rural area can procure these financial services and benefit themselves and the entire community. This is really what Islamic social fintech is all about. And the key benefits are that there is a level of convenience. Obviously, instead of the average entrepreneur in a rural village in Africa, spending $10 or $5 to go to the town, procure goods, come back, they can now receive at the touch of a button. They can receive goods, they can procure financial services, etc. It provides a means to keep economies expanding, while traditional methods have limited applicability. There's an improved, efficient, and secure payment system. There's speed with accuracy, innovative way to address the financial data mining issues, etc. It is user-friendly and efficient time management. So from a time management perspective, this is extremely important, is that social entrepreneurs or Islamic social entrepreneurs now don't need to waste too much of time going out there and really finding it difficult to procure funding, standing in huge and long queues at different towns to procure banking services, etc. And they can also be a mechanism of financial inclusion, because bank accounts will be opened, etc. And now their funds can then be used in a secured manner to procure goods, to make investments, etc. Next slide. So this is an example of an Islamic social impact sukuk. So there has been a few examples of social impact sukuk. For example, the World Bank and the IMF issued sukuk for impact in terms of funding vaccinations. However, much more needs to be done in terms of sukuk that can be used as a tool to empower and create, and can be used for impact and poverty reduction, etc. Now, let's look at this example here. As you can see, you have a NPO or private organization that provides the expertise to managing the sukuk vehicle or the sukuk SPV, which is a musharaka. Then you have the waqf, So you have waqf where Muslim investors or funders donate funds via a waqf model, and the waqf then invests, or the Islamic Endowment invest into the partnership. And then you have other investors that also come in. As you can see, investors which are partner B, they also come in on a partnership basis, and they also get a return based on the profits. Then you have a government commissioner involved. You have an independent validator that also gets involved in terms of perhaps providing contracts, for various social projects, etc. Now, examples of this include the fact that, for example, there is a government. They say, look, we have a requirement to fund $10 million worth of road contracts. So you would have then 10 underprivileged entrepreneurs who don't have funding. They could receive $1 million each of funding through this form of sukuk. And the government would then be able to provide a guarantee to pay the sukuk SPV once the work has been concluded by these underprivileged or empowered contractors. Now, through that way, instead of larger contractors benefiting from these contracts with government, the government now would also be able to kill two birds with one stone. In other words, the government can be able to ensure that their contracts are fulfilled, and more importantly, also is the government is empowering underprivileged local people who then can also benefit their families, etc. So this can be a powerful move where sukuk can be used to provide for empowerment, impact finance, etc. Next slide. So these are some of the different fintech platforms that are out there. As you can see, you have financing, you have crowdfunding, credit and factoring, trading, alternative payment methods, and you have other fintechs. So Islamic social finance can actually fall under each one of these different categories, and there's a huge opportunity in terms of Islamic social fintech. Next slide. Now, what are some of the general Sharia guidelines? We have discussed this previously, but just for revision purposes, all of the transactions must not have interest. Trading between parties is acceptable. Uncertainty and gambling is impermissible, and there has to be sharing of risk between the parties. Obviously, sharing of risk is not in every transaction, but in certain transactions like equity-based transactions, there is a sharing of risk. Next slide. Now, this is a snapshot of Islamic Fintech. And as you can see that there are various Fintech companies in different spaces like crowdfunding, alternative lending, payments, etc. So in all of these different platforms, there could be a social finance element to it where the underprivileged and poor also benefit from Fintech through financial inclusion. Because remember, that one of the maqasid, one of the main objectives of Sharia is poverty reduction and alleviation of poverty. And obviously in this month of Ramadan, with the last few days dawning upon us, that one of the key messages of the month of Ramadan and key objectives of Ramadan and fasting is how we can feel for the poor and empower the poor, etc. So we should be looking also at initiatives of how we can benefit the poor through these Islamic social finance instruments and mechanisms. Next slide. So this is a snapshot of the Islamic fintech landscape. As you can see, various entities involved in different segments of the Islamic fintech landscape. Next slide. So this is an example of fintech in Africa, not necessarily Islamic fintech, but the opportunity that avails itself here is that there is a huge opportunity for Islamic fintech, Islamic social fintech in Africa, where we can essentially use these fintechs in Africa in different countries to create the Islamic versions thereof and benefit the society at large. Now, examples of this is, for example, you take an app of, let's say, Kiva. Now, Kiva provides loans to entrepreneurs all over the world, including in Africa, Kenya, etc. Now, if you have Islamic Microfinance that is linked to Kiva, for example, immediately you have an existing ecosystem there. You have the platform, and now you have Islamic products that benefit the masses. So there's a huge opportunity there, and I would encourage entrepreneurs or participants of this webinar to look at how we can collaborate with existing fintech platforms to develop Islamic fintechs, Islamic social financial instruments and concepts in association with their current platforms. Next slide. So obviously a huge opportunity is in terms of Islamic blockchain and how smart contracts can benefit the poor in Africa. And one simple example of this perhaps is that, if we had a smart contract where we can provide for the origins or origin certificates of produce and agricultural produce, then that would be of huge benefit to consumers in places like Europe, the West, etc., where they are seeking to understand how they can make an impact on entrepreneurs and poor people in Africa. And examples of this include, coffee that is purchased from Tanzania, where the origin certificates are then provided in terms of knowing the exact source of where that coffee was produced. So these smart contracts can benefit the entire ecosystem, because eventually you can have the smart contracts that can be financed also through Islamic financial means, etc. Next slide. So there is a huge opportunity in terms of wealth that will be transferred to the next generation, approximately $30 trillion to the millennials of the next generation. And obviously, millennials are 2 times more likely, as you can see, to make sustainable investments than the average investor. So this is where the opportunity lies, in the fact that if we can create ESG funds, social impact funds, Islamic social impact sukuk or Islamic social impact bonds, that at the same time one can make a return but also benefit the poor people, then we know that our funds are being deployed to truly make an impact and benefit people on the ground. Next slide. So Islamic social fintech in Africa. So approximately 50% of the population in Africa don't have access to branch networks. 42% of the population are Muslim. It is the youngest population globally, and there's a huge rise of the middle class in Africa. Some of the top investors in Africa include Barclays, Omidyar Network, Bill and Melinda Gates Foundation, and the MasterCard Foundation. So there are various investors, whether we call them seed stage investors, venture capital investors, private equity investors operating in Africa. However, what we do need to see is where there could be more Islamic investments or Islamic social finance investments into Africa, and funds being utilized in a methodology that empowers people on the ground. Very often we've seen that funds are used to provide food hampers, etc. But we need to change from that quite dramatically if we want to achieve empowerment at a massive scale. Next slide. This is a slide of Islamic Fintech in Africa. Next slide. So the funding of startups in Africa has hit a $1 billion mark in 2019, and it's several $1 billion as we approach 2021. So there's a huge opportunity for startups in Islamic Fintech to benefit from funding, and there's a huge opportunity, especially with the Africa Free Continental Trade Agreement, where the borders of all 52 states in Africa would be opened up, and there would be one free trade agreement or a free trading environment for the entire continent. Next slide. So Islamic Fintech perhaps could be summed up in terms of achieving the greatest benefit through agricultural finance and microfinance in Africa. And according to an Ericsson mobility report, 70% of the population would be using smartphones, and there's a huge opportunity for Islamic microfinance through fintech. And what could happen is that we could provide access points by mobile payments, retail store points, etc., in remote areas. So the ecosystem in Africa is a little different from Western countries and Western jurisdictions. So in Africa, you would have various retail stores. In South Africa, we call them spaza shops. In the retail areas, where payment points could be developed there, and those retail stores could be developed as ATMs for poor people to access financial services. And microfinance essentially speeds up financial inclusion, and we can create a more efficient financial ecosystem. So by creating a proper Islamic social ecosystem, we are in effect empowering people and reducing poverty at a massive scale. Next slide. So we now come to the final point, is that how can we assist as GIFS, as a firm, through our networks? So obviously we provide technical support services. If you want to develop an Islamic social fintech solution, we provide networking, funding, the Islamic compliance. And just to give you an idea in terms of some of our initiatives as GIFS. So in terms of social finance, we are currently developing an app or a mobile application technology that we could use to essentially Islamic financial instruments. We're able to get a rate for an Islamic loan or an Islamic funding solution through a mobile app. And one could also do payments globally, at the touch of a button. One would also be able to purchase utilities, pay for bills, etc., through the application technology. We are currently in the testing or pilot phase, and we should be launching in the next month or two, or very soon, in South Africa as a pilot, and then going on into other African countries like Nigeria, Egypt, Morocco, etc. The second initiative that we're working on is creating an Islamic tech hub or an Islamic entrepreneurship hub in South Africa, where through various organizations, we'd be creating a fintech hub where you would be able to pitch your idea, receive funding if it is suitable, and we'd also mentor you and provide you with funding on an ongoing basis. So this is an initiative that will be launched, inshallah, after Ramadan, after the fasting month, and one is more than welcome to contact us in terms of how they can assist us or join us in our initiative. So with that, I'd like to terminate the first part of today's discussion. And I would also encourage you to reach out to us if you have any questions or seek clarification, or you have any projects that you may require assistance from us in terms of Islamic social finance. So I now hand over to Emil for the Q&A session.
Excellent. Thank you very much, Ismail. Always insightful. I think there's one issue that I often hear, especially when you deal with some of the bankers and other executives in there, is what is the view and what is the stance, especially you mentioned blockchain as well as fintech, because the two key issues is always going to be regulation and compliance. How do you deal with that, especially in a place like Africa, where, you know, let's face it, the infrastructure or the financial infrastructure doesn't really exist, or is not comparable to what you see elsewhere in other markets? What is your stance on that?
So look, I think that's a very important question, and our view on this is that instead of reinventing the wheel and trying to develop new technologies and systems for Africa, let us adapt technologies and platforms from other jurisdictions that have worked in similar denominations, like in India, in China, in Bangladesh, etc. And we can bring those initiatives into Africa and use existing platforms to roll them out. Because to create new platforms might just take a long period of time. And hence, I had alluded to the fact that what Islamic social platforms could do is partner with existing platforms in Africa where there's no need to reinvent the wheel. We already have existing platforms and we just roll those solutions out. That's the first part of it. The second part of it is that we need stronger lobby groups, not only in the business field, but also in terms of government, where lobby groups can promote the development of Islamic finance at a governmental parliamentary level also. And sometimes you have issues with different lobbies that may not be too accustomed to Islamic social finance, etc. So we need stronger lobby groups. We need stronger support, from community organizations in, community organizations or Islamic community organizations that will be able to push that agenda. And this brings me to the last point, is that a lot more education is required around Islamic finance in Africa. So currently we have education that has been provided at the top level to professionals, bankers, etc. But we need to provide much more education and awareness at the grassroots level so that communities, Muslim communities in Africa, understand the importance of Islamic Fintech, Islamic social finance, and we now have much more awareness and education around these concepts and models. A typical example of this is that a Muslim in rural Africa, if he or she is
sounds like we've lost him.
Presented.
Sorry, your connection got lost there for a bit.
Then that person too is then the alternative to an interest-bearing loan. You would have Islamic microfinance initiatives that they can now have access to. So I think a lot more education is required around that. We need to do a lot more lobbying at a governmental and parliamentary level. And more importantly also is that we need to start engaging in an ecosystem with existing players so that we use their platforms to create Islamic social financial initiatives.
Okay, very good. So let's get to some of the questions. We've got a few questions here that we would like to get a view on. The first one is from, reads, rural outreach to provide, obviously the fintech services remains a challenge without connectivity and telecoms. Shouldn't be their focus to first ensure necessary infrastructure is available to deploy such solutions? And if so, is there any way that funding could be made available to obviously further develop telecoms or ICT infrastructure in rural areas?
So look, that's a very important question. And if you look at the African continent, is that the big challenge is obviously connectivity, etc. And as I've always mentioned, is that you've got to have solutions you've got to have homegrown solutions for the jurisdictions at hand. Now, instead of importing solutions from the West, etc., and trying to produce the same solution in Africa might be extremely difficult, because you have certain areas on the African continent that are extremely isolated. It could be maybe a couple of 100 kilometers that one could get from one village to the next village, for example. So we could have two approaches to this. The first is that we seek to develop an infrastructure which would be extremely costly and would only be available to the likes of large, organizations that have access to billions of dollars of resources to then plow that into the infrastructure spent. Or we could use homegrown methods, like as I mentioned, we use local spaza shops, local retail outlets, etc., as pay points where locals can receive financial services and receive those benefits. This, in my view, is a better distribution methodology rather than developing and spending billions of dollars on infrastructure spend. Obviously, there are networks like telecom networks like MTN, Vodafone, etc., that one could partner with to also distribute these solutions. So that mechanism is also there in terms of using existing mobile network operators.
Using the Waqf, is that not the opportunity? You had that diagram before. We have a SIB partnership, and then from the donation funds, because then in theory, if I understand it correctly, that's something that could possibly subsidize some of the elements, because that's one of the big issues that you always have in Africa is the cost of connectivity. It's still fairly expensive compared to other countries. So if there's better networks, better connectivity, more people using it, that economy of scale obviously got a role to play. But just to get things going, as a catalyst, is that a possibility? Is that something that could be set up?
So I think that the usage of Waqf could be a very strong case for funding infrastructure bonds in Africa, and using the funds to fund impact bonds that would be able to fund initiatives like hospitals, telecommunications, infrastructure, etc. The one example that comes to mind is that I have seen certain logistical infrastructure, like the usage of lamp poles to provide Wi-Fi to people around those lamp poles.
Light, and through light, I think they've
yes,
got some tech. Yes,
correct. So through the usage of solar power, you could have electricity. Number one. Number two is you could also use those lamp poles to provide the telecommunication infrastructure like Wi-Fi, etc. And what could then happen also is that the services to the Wi-Fi can be funded by advertising through multinationals advertising on those lamp poles, etc. So I think in Africa you've got to look at much more resourceful,
out of the box.
Out of the box, correct. Out of the box initiatives in terms of how we fund these things. And I've seen these models work, in other cases where, imagine in a rural village in Africa where, a person might have a smartphone, but he doesn't have the money to access the internet. The internet is such a powerful mechanism that it could be used for EdTech, in terms of providing education online. Now, without the Wi-Fi, they can't access that. And we've seen, in various countries because of COVID, school children, university students could not attend universities, but they even didn't have the money to purchase Wi-Fi. So we need to look at these issues much more carefully. And as I said, we could use out-of-the-box mechanisms to achieve that.
Good, excellent. So let's go on to the next one. And I think you kind of touched on it before. The question was whether they are able to tailor-make a financial solution that can benefit a group of entrepreneurs who are organized and clustered together. So let's say, for example, they're looking for $10 million, and then there are multiple small businesses that can actually benefit from that as kind of seed funding to get things going. And I think you mentioned something that you're starting something up in South Africa as well, isn't it? In terms of a tech fund or is that something that could be scaled up and rolled out into other areas?
Yes, so this is a very important point in that we are currently working with what is called the SPAZA associations. So, Emil, I think you should know about SPAZA. So, you have these rural, shops in rural areas in South Africa, and obviously these exist now, throughout the continent. And to give people an example of those who are not from Africa, that you get these containers, for example. You have a container. Someone uses a container to set up a small shop in a rural area. They sell snacks. They sell basic services and goods, etc. They even sell airtime and basic services, etc. Now, this is extremely important in Africa simply because the average person in a rural area, in order to get from point A to point B, they would use different transport mechanisms which they would need to pay for, because the public transport system is almost defunct or almost non-existent. So they would need to pay to go to a town to access these services. Now, instead of doing that, they could rather purchase their goods or their basic services from these SPAZA shops or these rural shops. Now, we working with the SPAZA association of, let's say, 2,000, 3,000 SPAZA shops, where we can do two things. One is we can provide them with a solution where they can purchase goods at a wholesale price as opposed to almost a retail price, so that there could be more margins for them. And also the consumer at the bottom end achieves a price reduction. That's the first thing. The second thing is that what we're also doing is granting them access to our mobile application technology, where through the touch of a button, a SPAZA owner that needs $2,000 of funding would be able to then procure a trade finance loan through the app. They would also be able to make payments to the app. They can also get an invoice discounting loan. They can also potentially even get a vehicle finance loan, so they can purchase a vehicle themselves. So they can use that vehicle now to go to the nearest town, pick up goods, etc. And in that, they can also make another income by transporting people and charging them for that. So these are the initiatives that we are working upon, and we're very excited to speak to more people and more associations where we can create more value, etc. Because at the end of the day, for us, our main objective is how we can create value and leave a lasting legacy in terms of value creation. And from a Sharia perspective, one of the main maqasid of Sharia is that, or the main objectives of Sharia is poverty reduction. So simply profit making and focusing only on profits is not entirely encouraged. We also have to look at the social impact benefits of how we can benefit society. And I think there's a huge initiative in terms of looking at this. Because as I said, is that you can give a man a fish today, tomorrow he will need another fish, and the next day he will need another fish. But if we teach a man how to fish, then he may teach another 10 people how to fish. He will empower others, and we're creating a virtuous cycle of empowerment and development.
Fantastic. I mean, I think also, any opportunity or any business that they're looking for funding, definitely reach out to us. We obviously, with collaboration with GIFS, are looking at funding fairly large-scale projects across the continent. But there's obviously, from ABiQ, we've got a tie-up with, it's called the World Trade Center through, it is the Agritech Future Stars, which is GFS. Very similar to GIFS, but GFS also, through our partnership, is we can assist you if there's any fintech opportunities would like to participate or get access to funding, one way or the other, reach out to us. I think that's an important thing, because we can look at where we can find the opportunity to get funding and financing for any good business opportunities out there. Moving on to the next one, Agritech, the agricultural sector. I think renewable energy is obviously a key thing, like we said as well. Building up the connectivity or ICT infrastructure, you still need power. So that's something that we talk about a lot, and we have a lot of projects that we're looking at the moment as well, hydro, solar, and so on. So I guess the question from this gentleman is how they could access it. Again, I think it's kind of answered already with my previous comment, is that if you have any good projects out there, reach out to us, get in touch. On our website, there's a place to give your details about your project, and we'll get in touch, and we'll evaluate it and see whether we can help you to secure some finance. Lack of energy, we kind of addressed that one already. Let me just see. Okay, so another question. With all the COVID restrictions right now, water projects are really important. We have water projects that are stalled because of lack of funding. So water projects in Africa, again, reach out. I think we've not worked we worked on hydro projects together, but we've not really worked on water projects. But we've got good connections with the likes of Matito, who has done water projects in Africa, as well as Aveng Water and so on. So again, reach out, any water projects, just get in touch with us, and we'll see how we can help. Let's move on to a next question. So there's a lot of questions here actually relating specifically to projects and funding. So I guess I'm gonna have to repeat myself. Let's see if there's another. Okay, there's questions about technology as well. They just see. I think maybe one of the questions that I would like to get back to is I've noticed on one of your slides where you actually show the different type of fintech solutions out there across the different uptakes in various African countries. There was a few of them that actually stood out where there wasn't any available. Is that due to coming back to government acceptance in terms of regulation? Or what would you say is the biggest inhibitor in terms of getting some of this new fintech existing proven concepts deployed in markets where it doesn't exist? Why does it not happen quicker, and is there a specific reason?
Yeah, so this is a very important question, is that what we tend to typically find in Africa, right, is that you have entrepreneurs that lack skills to evaluate, develop, raise funding for fintech initiatives. And this boils down to the main point, is that we need to have a lot more awareness, education in terms of what is called startup labs, startup hubs, technology hubs, etc., that will provide the right type of mentorship skills for these budding entrepreneurs who have good ideas, but they don't have access to the skills and also importantly the funding, so that they can scale up the initiatives. Very often what you find is that there's a huge mismatch between what exactly the entrepreneur intends and what transpires on the ground. So basic things like feasibility studies, ensuring that you have proper addressable market, ensuring that you have the right team, etc. All of these things are important as fundamentals in order for a startup to be successful, especially in Africa, where there are much more where there's much more hurdles that need to be crossed. But more importantly, as I've always mentioned, that in any business, 9/10 of the business is down to your skills and how you manage your business, and 1/10 of it is only the funding. So very often you have entrepreneurs that say, well, look, I have a good idea, that they don't even have a minimum viable product. They raise funding, and then they realize that they've missed a couple of steps in terms of the right methodology to launch their startup, to launch their initiative, and to launch their project. And this is where I think GIF a lot of value to any entrepreneur, is that we have the right support staff, professionals that will take you through the right stages if we decide to fund a project, in terms of saying, you've got to start with the minimum viable product. You've got to test the market. Let's understand what works, what doesn't work. Split testing, etc. All of these things need to be done correctly so that one can achieve the optimal benefit and value creation of that solution that one is trying to create. And I mean, very often you have entrepreneurs that seek to do exactly the same that happens in the US, for example, where you can achieve massive valuations overnight, etc. In Africa, you have a very small venture capital private equity ecosystem, and generally you wouldn't achieve strong valuations unless obviously you are one of those few entities that achieve unicorn status, etc. So I mean, it's important to have localized solutions that are adapted, that work, and there's proper education that is done. So I think, in brief, my answer to your question is that a lot more education needs to be done. There's a lack of mentorship and skills that need to be provided.
Excellent, appreciate it. Thank you very much. Right, so what about, would you be looking at modular hospitals? Something probably containerized, I guess, just for rapid deployment and development in rural areas. Is that something you would consider?
So this is definitely something that we would consider, and we're currently playing with the idea of looking at mobile fuel stations in Africa. So we've already gotten the approvals from the different ministries, and we're looking at launching some pilots in South Africa, and then looking at other countries. Now, if you take an example of a mobile fuel station, the mobile fuel station can provide so many other services to a rural population, like obviously the fuel. Secondly is the utilities could be paid through that mobile fuel station. You could have basic goods and services that are provided. You could even have a telecom operator that says, look, we're providing our networks through this mobile fuel station. So we would be very keen on that. And I know that there's these modular hospitals and clinics that can be deployed at rapid speed in rural areas.
Very good. Well, Ismail, I think we've gone through most of the questions. There's a few that's kind of similar and of a same theme, which we've already addressed. I would like to thank you again for your participation. And then hopefully in the next couple of weeks, we'll have a follow-up session on a relevant topic. It's always been nice to have you with us on these webinars, and obviously they go far and well, are always well attended, and we can even see the recorded sessions. A lot of people are looking at them. So once again, thank you very much for the session, and I hope to have you back in the next few weeks.
Perfect. Thank you very much, Emil, for your kind time. And with that, I would also like to, in advance, wish all our Muslim participants today a happy Eid Mubarak. And I hope that you had a fruitful Ramadan. And I make dua that Allah subhanahu wa ta'ala accept all of your worship during this month of Ramadan. And inshallah, we will be conducting a series of further webinars. And I'd also like to invite you to attend these webinars in association with ABiQ. And once again, thank you very much, Emil, for your time, and the management of ABiQ for putting this very nice webinar series together.
Thank you very much, Mufti Ismail Desai. Eid Mubarak, and we'll speak soon. Goodbye, everybody. Thank you.
Thank you very much.